Ladies and gentlemen, welcome to the Authentic Podcast with Justin Doulard. And thank you for tuning in to another episode. It's time!
All right, ladies and gentlemen, thank you for tuning back in to another episode of the Authentic Podcast. It is Sunday, Valentine's Day, February 14th, and we got a repeat guest on our hands, Mr. Matt Moore, my crypto guy, and thought the conversation we had the first time went really well, and we had a lot of good feedback, and then a lot has happened since it was about probably 40 days since we last had our talk, and things kind of went crazy about 5 to 6 days after that. So thought it'd be good to have him back on, and he enjoyed it as well. So here he is. What's happened with you, Matt?
Absolutely, man. This is what's so cool is it's Valentine's Day. Obviously Bitcoin caught my heart, and it seems like Bitcoin's catching more people's hearts, especially in the last couple of weeks. So, if I can help explain this mysterious Cupid to people, then let's do it.
Yeah, man, great analogy. And I think you do help explain it quite a bit. I know there's a lot of people who kind of want to dive in and they still have lots of questions. And like you said before, you kind of have to do your own research, but it's nice to kind of have a liaison or a consultant, as you say. And so hopefully, this, like I said, eventually will, stem you some business and, people can kind of get on the train. So
yeah, no, it's great because you can read the internet. You can read my book even. And I would talk about the monetary system, not so much about crypto, but more so the basic understanding of the money system. And it's like you can get all this information and it's helpful. But I just got off the phone with a client just 30 minutes ago doing a cryptocurrency consultation. And he's like, Matt, he's like, I went out there and I started reading all this information. He's like, I see the dots. He's like, but I don't really know which ones I should connect first. And so I think that's really where it comes into is I make the point there's a lot of free information out there, but A, which one is valid and worth listening to? And then B, once you do have the valid information, you kind of have to go through that puzzle of connecting it all because this space is so new and evolving so fast that it's like drinking from a fire hose. And I am a consultant in it, but I don't claim to know everything. There's a lot of people out there that are a lot smarter than me. I've just tried to spend the last 4 years trying to consume, understand, and conceptualize all this information and make sense of it. So that way, because I knew that this new bull market was going to come. So I was like, okay, people are going to need help with this, especially, and no offense to the boomers or an older generation, if technology is going to be exponential and compounding in its growth, then we got to be able to understand what's here and what's coming, and then being able to help people into it. It was probably 2005 before my dad got email. So it's I kind of want to make sure people understand it before we get to that kind of point.
Yeah, and you can definitely tell that it's not just an older generation thing, just because even the young people want to dive in, but they're like, this is weird. And we're all super tech savvy as it is.
Right.
So like you mentioned, for the older people, it could be a little, challenging or kind of to be kind of timid. So,
yep.
But yeah, I know. Like you just hit on, we talk about crypto, but then we talk about just the money market itself, which kind of brings up a good point about the value of the dollar. And you're recently sharing these articles about how we're just continuing to print money. I think there's talks that there's going to be another stimulus check, and a lot of the people that are super financially savvy are like, this is not good. I mean, obviously it does help people for a short period of time, but in the long haul, this is not a good thing. So,
right. Yeah. I think we all fall, no matter our profession, especially in the financial world. We can obviously have this mentality of this time is different, and sometimes that can be applicable, but most of the time it's not. And so I always, even when I'm looking at the cryptocurrency market right now and the evaluation that's taking place and the price rises and all this stuff, I'm like, okay, this is great. We have a lot of momentum. We have a lot of adoption, and that adoption is going to continue. But at some point, there's going to be healthy corrections. At some point, we are going to have to enter into a bear market. Everything is yin and yang. everything is a balance, right? So, as an extended period going up, an extended period going down. But there's a lot of people, which I had mentioned last time when we talked, about this idea of a super cycle, in which you have such a massive awakening to this space, since it's been so small for so long, and so much adoption taking place, and so much products being developed around it, that you get to a point to where, and I think I was listening to an interview not too long ago, even just with the stock market. I think it's been 10 years of perpetual, upward momentum in stocks. And so it's like, Bitcoin in the cryptocurrency space is pretty cyclical, but what will change, if anything at all, if this large wall of money and institutional players and products and people start coming into the space and utilizing it, does that change anything?
And you think the more people coming into it's going to be a good thing, correct?
Yeah, it'll be a good thing
in the long haul.
In the long haul, yeah, it'll be a good thing. It's just that a lot of us are asking the question, the last bull and bear market cycles that we had, we were a very niche space. And so there weren't a lot of these on-ramps. There weren't a lot of these products developed around Bitcoin. You didn't have banks offering Bitcoin. You didn't have Tesla buying Bitcoin as a reserve asset for its balance sheet. You didn't have all these corporations that are now looking to do the same thing. We have a long ways to go probably with as far as price and dollar terms go. But, do these factors change anything in Bitcoin cycles? And that is really the unknown at this point, that everybody in this space is asking this question. Any of the gurus you try to follow or look into, everybody's going, part of us, we're going, okay, let's take this with caution, because we don't want to get caught with our pants down and pretend that things are quote unquote different, and we're going to, continue to go upwards for a longer period of time than what we're normally used to, and then get eaten alive, going back into a bear market. So, but even if we do go back into a bear market, I'm not too concerned, because every time we have, it's made a higher low. So, it's just, do you want to take profits at any point,
Let's talk about that. That's one of the topics I had for us. Tesla buying $1.5 billion worth of Bitcoin. There's lots of speculation on why they did that. There's all kinds of articles out there. Why do you think they did that?
Well, I think Michael Saylor from MicroStrategies, he's the CEO of MicroStrategies. He is a Bitcoin bull and a recent convert to the Bitcoin ideology. And he has a MIT engineering background, and he has looked at this, and he got hit with a brick basically during the COVID stuff, and was like, whoa, our system's changing. Bitcoin's going to be the life raft that we need. And he is such a good communicator when it comes to explaining this stuff in a very consumable manner, but also with a hint of engineering, that he's very logical, very rational, very reasonable. And so he made a tweet to, to Elon Musk, and they had a conversation. And I think Michael Saylor was a big part. Because MicroStrategies, they're not Tesla, but they are, they are $1 billion company, and they are, they're traded publicly. So, he is kind of a big deal. So I think he had a lot to do with it. But I think just even with the nature of Elon, as he quoted in one of his tweets, looking in retrospect, it was inevitable. Elon was in the payment space. He was a part of PayPal, bringing that to fruition, so it's like, he's a very smart guy. He looks at the technology. He looks at the monetary system, put two and two together. He goes, hey, this is the future. Why don't we go ahead and expose our company's balance sheet to Bitcoin, and hedge against inflation. But ironically, as it helped MicroStrategies, their stock price, it's going to do the same for Tesla.
I know they talked about potentially taking Bitcoin as a payment in the future for Tesla. Do you think that's something that's pretty realistic in the next decade?
Oh yeah, 100%. Yeah, I mean, there, Bitcoin, whether you know it or not, whether it's very evident or whether it's happening behind the scenes, Bitcoin will be used as a settlement layer. So yeah, I think it's like I said, in our previous conversation. Bitcoin is this evolution of a new form of money. I call it a layer one money, and I think you're going to have this new financial system that rises up, and Bitcoin's basically going to be the gold of the new financial system.
I know we talked about it quite a bit and may revisit it, but how soon do you think it'll be that we're using Bitcoin like we do a debit card? Like at I mean, just the use of Visa.
You can right now.
I guess like super user friendly for people. Right now it seems kind of people are kind of torn on how to use it, or it's not as easy as a debit card. But
Right.
For
Well,
for
they have.
the
I don't mean to interrupt.
no, you're good. Go ahead.
I just
Yeah.
know how to answer your questions. I was like, I thought I might answer it.
No, go ahead.
Yeah, no, I think, yes, crypto to crypto, like somebody pulling out their crypto wallet and then me sending them crypto to their crypto wallet. Like that, that is going to be here very, 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 very soon. And in fact, it is already happening to some extent. It is happening in the form of debit cards, which you could set up an account with something like crypto.com. And there's other services that do this where you can literally have your bank account attached to this exchange. This exchange has a balance under your name in Bitcoin, Litecoin, Ethereum, name your cryptocurrency. Well, they issue a debit card. And so when you use that debit card at a store, it basically takes the crypto out of your account, converts it into the cash, and then it's given to the retailer. So so you can spend your crypto like just using a debit card, but I don't actually tell people to do that. I don't think it's smart to do at this point in the game, just because of the evolution that it's in. Like, I mean, it's like, do you want to be the guy that spent 10,000 bitcoins on a single pizza? Like,
Oh, yeah.
I mean, like, yeah, sure, you can use it, but going back to that idea of Gresham's law, if you've got two forms of money, one that's appreciating in value, one that's decreasing in value, you're going to spend the one that's losing value instead of the one that's gaining value, and you're going to hoard that one that's retaining and gaining value, and you're going to keep that bad money in circulation. So I don't see us getting to a point of Bitcoin or any other cryptocurrencies becoming a true medium of exchange until there's a complete faith and loss in the current fiat money system.
Yeah, I use that story a lot for reference just because I think it's crazy about the guy buying two pizzas or whatever with his first Bitcoin back in,
Right.
what is it, 2009 or something. But
Yeah.
I read, it might have been one you shared or someone else shared, but it was an article that republished that, and it was on Facebook. And one of the comments on the thread I read, I don't know if it's true, obviously I don't know this guy, but he said, back in 2011 or something, he said, my brother had a friend in Canada and was trying to convert his Bitcoin to cash and said, trying to do like a deal with me or whatever. And I told my brother, I was like, I'm not, buying this internet money or whatever, or selling my shoes for this. And he was like, if I would have done that hypothetically today, I would have had upwards of like $30 million or something.
Right.
He was
right.
like, it makes my stomach turn every time I think about it.
Yeah, I've seen that interview. Yeah, that's pretty funny.
Yeah, but I mean, what can you do? I mean, at the time, nobody knew what it was, but still, that would be pretty brutal.
Right.
Or those. I think we talked about it last time. Those people that have are locked out of their accounts and they've got upwards of 100 million in there.
Yep.
You think they'll ever get that open, or is it just lost?
No, I know that. I mean, unless they can find the private keys, I mean, it's probably lost forever.
So Bitcoin has a cap, and once
Yeah.
that cap is hit, there will be no more in circulation. That's correct.
No more minted. So in other words, 21 million is the cap, and so that just means that the newly issued supply will stop, and that means that what is circulated will be 21 million. But and I think it was our previous conversation. Despite there being 21 million, 5 to 6 million of them are essentially lost forever, basically stuck on the blockchain because people lost their seed phrase or private keys and they don't know where they are at. And so if you don't have that information, then you can't really move it across the blockchain. So it essentially just sits there forever, which is like a cash burn.
Are there other currencies that, so like I read one on Ethereum and I could be wrong, so that's why I was asking. Ethereum is not like Bitcoin in fact that they do circulate more eventually. Is that correct or not correct?
Yeah, no. So Ethereum is inflationary to an extent. Um, it does not operate as hard sound money like Bitcoin. Obviously, it's not going to quote unquote inflate like the dollar is, but it is inflationary in its design, and I think it has to be because it's an operating system. It's not really a money. I mean, it's utilized as a money to some extent, but the way I see it is, it's a platform to build smart contracts on. It's a platform to build decentralized applications. So you need something that's going to be able to provide that liquidity or that I guess you could call it tokenomics for an ever expanding universe of applications.
So you are big or you're not big on Ethereum?
No, I think Ethereum's going to be around. I think Ethereum's going to do good. I think people are going to use Ethereum. I think, but it's very experimental. I think it's got good people that are working on it. But and I hold some Ethereum, but I'm not really using it as a store of value. I'm more speculating on it, hoping that it will appreciate in value based off of its utility and use case.
What are your top 5 cryptocurrencies?
So my top 5 in my portfolio, my largest holdings is Bitcoin. After that, it's Theta, and then below that, probably XRP. Just more of a speculative play on that one. And then I've got Litecoin, Bitcoin Cash, Digibyte, Stellar. I've got Orchid. I've got what are some of the other ones? Veritasium. I've got oh man, what are some of the other ones? I got a whole bunch. But despite me having a pot in or investments in multiple types of cryptocurrencies and projects, I try to, majority of my portfolio is in Bitcoin, as I think everybody should be. Not financial advice, just personal opinion. The way I like to put it is Bitcoin is your store of value. And you speculate with the altcoins in hopes of increasing your value to buy more Bitcoin. So that's kind of how I look at it.
I know we talked about it before that you're not huge into the stock market and you don't follow it a whole lot. I know you're not in it and then you don't read upon it a whole lot. So the Robinhood fiasco, we were going to talk about it because everybody knows about it, even if you don't have stocks. But that happened about a week after we talked. Based on your research, what happened? I guess we know what happened there, but how bad was that for Wall Street and the stock market, considering they kind of got exposed on that whole deal?
Yeah, I mean, because one of the reasons why I dove into the cryptocurrency space was because of the nature of blockchain technology, the nature of being able to verify. It's kind of like that idea, trust but verify. And so, like with public blockchains, you can actually look, and the accounting, the auditing, the whole process involved in that is very public. You can see it. The ledger system is there to look at. But with the current financial system in the markets, especially with the stock market, you've got your trading that takes place. Whether you're shorting or longing, you've got these derivatives. These contracts that are basically just representations of assets, and they don't actually get settled until a later time. So they might have traded hands multiple times. It's said, like, even with the silver and gold, the precious metals market. I believe, it's my personal belief based off of the information that's out there, that they artificially suppress the price of assets like gold and silver because they can do it with paper contracts, derivatives, and essentially what happens is, for every ounce of silver out there, there might be 250 ounces of it in the paper market. So it's like, do I want to be involved in a system that's heavily verified, that I can look at, or I have to take somebody else's word for it? And so if everybody rushes the system all at once and wants to receive those assets, well, what if there's 5 Joe Blows that own the same thing? So it's like, who gets it? you guys just got scammed. Sorry. You know, like, and I think what's happening with this Robinhood stuff is it's really lifting the lid on the Wall Street games. You know, I haven't looked too deeply in it. I don't follow necessarily, like you said, the stocks and those markets specifically, but, you know, whether it was a bunch of naked short selling, where, you know, it's like you had these hedge funds that were, you know, heavily leveraged and were shorting GameStop. And it's like you get a group of people together and they're like, screw the system. Let's try to get one to the big guy, you know, like, and let's counter these you know, these shorts and liquidate these guys. So it's like I feel like what happened, whether I know the intricate details in and out, like I was excited. Like I was really excited to see the little guys team up against the Wall Street game. I mean, like one of the reasons why I don't play in the Wall Street game is there's so many like nuts and bolts, moving pieces, and so much to understand. There's so many layers. There's so many, you know, lying that takes place. I mean, there's a lot of, you know, face saving. It's just like, do I really want to be a part of a system like that? And I chose not to a long time ago. Like I've never had anything in stocks. And that's why, you know, going back saying cryptocurrency was so appealing to me was it was grassroots, ground up, verifiable, done by math, open, public, honest. And so that's why I've always been very attracted to it. But with the GameStop stuff, like I think people are realizing, like, wait a minute, you, the institution or Robinhood, get to tell me when I get to sell or buy my asset? Like, that's not right. Like, is this, I thought we had free markets. Oh, it's free until we start winning. Okay, I see how it is. You know, so like I think it's done a lot of good, you know,
Yeah.
to bring people into the light of really what's going on.
Yeah, I mean, I know a lot of people that were on that, you know, Reddit blog and bought into it, but then, like you said, all of a sudden they stopped or paused. You know, you can't buy or sell, or they limited
Right.
to like 2 or 3 shares a pop, which I think that's one of the first times that had happened with Robinhood, at least on a nationwide scale. So,
Right.
very, very crooked.
Yeah.
So you've been talking a lot about banks that are kind of behind the curtain getting into crypto. Elaborate a little
Yeah.
more on that, about, because you said there's sometimes, last time we talked, that some of these banks will act like they're not interested, and then behind the doors they're kind of secretly going in.
Right.
And you're seeing more and more of that. I know you've been sharing those articles and whatnot. So
Yeah. I mean, yeah, you got payment processors like Visa and MasterCard that are going to start, you know, providing cryptocurrency transactions on their networks, you know, but it, you know, or it's like with the banks, whether it's America's oldest bank offering Bitcoin or cryptocurrencies or custodian services, banks now getting the benefit to be custodians of that. They've been playing it down for a long time. And whether that, and I believe that it was intentional, because as they did that, they were buying up at the back end, they were developing products, they were having these discussions, you know, like they wanted to try to bring the boat back, you know, they missed it, they want to bring it back. So but I think banks know that this is the future. And whether you want it to be cryptocurrency from the free market like Bitcoin, or whether it's a cryptocurrency that a nation state tries to offer, the truth is, if there is going to be changes to the fiat money system, if we're going to have some kind of reset, and if these financial institutions know that, I mean, heck, you got Citibank coming out and saying, hey, $300,000 Bitcoin. I mean, they're giving price predictions. They're developing products. They're very bullish on this. So it's like, I see them going, okay, we need to stay more relevant. We need to provide products and services, because not everybody wants to hold their cryptocurrency themselves. They're very comfortable with using institutions. Whether I believe that's right or wrong, it's not for me to decide. It's for the free market to decide. It's for the individual to decide. So I think they're going to offer these services and products. And here's one thing that should worry the mom and pop banks. One thing that should worry the average community bank is that right now they're kind of like the middleman between the Federal Reserve and us, the people, right? So they're part of this banking system. They're part of this network of banks. And essentially, the whole system starts with the Treasury and the Fed. And so what happens if a nation state, or what happens if the Federal Reserve, a private central bank, decides to issue its own cryptocurrency in order to combat deflation, encourage the velocity of money? Well, the best way to do that is to get money in the hands of the people. So what does it take if, let's say, the Federal Reserve has a cryptocurrency and they say, okay, download this app. This app is your wallet. We'll deposit money directly from the Fed into your wallet. Well, they just bypass the whole banking system. So
you just skip the middleman.
Yeah, you skip the smaller banks. So it's like, I think what people are realizing, whether they are consciously or subconsciously realizing it, is that what blockchain technology does is it cuts out a lot of the fluff. It cuts out a lot of the middlemen. And so I think banks have to position themselves to become different types of product, providers of services. And I think, not saying that they'll be completely irrelevant. I'm not really saying that. I do think you're going to have, services where you could collateral. Yeah, they're just going to have to adapt,
Yeah, and I mean, I know there's a lot of banks. I want to say not that long ago, I mean 10, 20 years, for the longest time didn't have, online banking, or an app. Now every bank has an app. I mean, I think for a while it was the big ones, and now the little guys are like, we have to have an app or something mobile, or people are just going to go to the big guys. So and then of course I actually wrote a little bit about it on one of my papers in grad school about the whole Wells Fargo fiasco. That's a whole different can of worms, but about how they got sued for so many millions or billions because they were doing a lot of sketchy things that their customers didn't know about. I don't know if you ever read about that.
Oh yeah, for many of these big banks, the cost of doing business is breaking the law. Like, they get slapped with a fine. Okay, so what? We'll pay it, but we're still profitable off the crime we just did. Like, that in itself is asinine.
Do you have any bankers at all who try to reach out to you and try to kind of get on this wave or pick your brain, or?
Not yet. I've had more maybe like financial advisors talk to me about it. But
what about those guys?
Yeah,
are they kind of worried? I mean, is that career kind of like the banking field? Are they going to have to adapt to that as well? Because
I think it's going to disrupt a lot of things. I think cryptocurrency, blockchain technology is going to disrupt it. I mean, just like the internet disrupted information, the music industry, it disrupted the brick and mortar stores. It's like what we witnessed with the transformation with the internet. We're going to see a lot of that same kind of transformation with cryptocurrencies and blockchain. And so, yeah, people are going to have to adapt, and it'll be interesting to see how that unfolds. But I think what's most important is people shouldn't stick their head in the sand, whether they believe it's got potential or whether they're a complete denier. They need to at least be educated on it. So when it does happen, they're not taken back by it.
Sure. Okay. So for the average person, what do you recommend as far as asset control or putting into? And I know, like you've elaborated on, everyone is different, but kind of tell us about your portfolio. And so.
Yeah. So what I do, I focus on wealth preservation. I focus on cash flow. I want things that create cash flow, and I want to be able to, preserve my wealth. I want to be able to flourish in this coming transition that I see coming, or that I believe is coming, based off of historical cycles. And so part of that involves, being involved in the cryptocurrency space, which is the new technology, the new space, the new financial system that I believe is being birthed, and playing smart in that. Majority of my portfolio in the cryptocurrency space is Bitcoin. I think it's smart for people to have their largest holding in Bitcoin. And then beyond that, the altcoins, you can speculate on them, you can read up on them, evaluate, their use case, the teams that are behind them, all that stuff, and make wise decisions there, and try to increase your Bitcoin holdings by the profits that you make off that investing. But so I have precious metals, I have real estate, I have crypto, and those are really my three focuses. I'm not involved in the stock market. I would say 60% is crypto. I'm young. I can expose myself to a
little more risk,
a little bit more risk. Yeah. Obviously, if I was older, I would probably hold a little bit more precious metals as a form of insurance. The real estate market, there's a lot that could happen depending on the economy, but it's still an asset if it's paid off and it's creating cash flow. So it's like there's only so much property on the earth. So, it's like once this bubble of liquidity that we've created worldwide of all this fiat paper money, it's going to go into things that are limited in nature. So, that's kind of my viewpoint on it. But yeah, I would say have exposure to Bitcoin, have exposure to the cryptocurrency space, have some precious metals on hand, have some land and paid off. It's like you want to be able to be self-sufficient, take care of yourself, and you want to be able to move, transition, and evolve into this new future with blockchain.
What do you think for Bitcoin or crypto to be accepted as very common as the dollar? Because some people are getting on board and some people will wait a little bit and some people will come in and it's not going to all be like on a certain date. Do you think that it has to be to get to a certain monetary value before people realize that it's real, or do you think that eventually they're just going to kind of be forced into it? So like you're predicting this week that we're going to hit 50K on Bitcoin.
Right.
Do you think eventually the dollar amount is what people are going to be like, hey, we got to get on it, we got to get behind that?
Eventually people are not going to want dollars. Eventually, people are going to they're going to start measuring their wealth in how much Bitcoin they have instead of how many dollars they have. There's going to be a flippening that takes place. And that goes back to that whole evolution of money and Gresham's law.
Is that just US dollar, or is that, worldwide?
That's worldwide, I mean, because even people who trade in cryptocurrencies, I mean, the number one asset that people are trading, or even looking at price-wise, people are looking at the U.S. dollar because the U.S. dollar is currently the world reserve currency. So, but with that said, it's going to be done in phases. This is an emerging asset class; it's an emerging space, and 2017. I mean, I would classify it as maybe like three different types of moments, and I think this moment in time is one of those moments where the whole world wakes up to it and goes, I've heard about this thing, but I should probably start taking it serious. And I think Tesla buying 1.5 billion for a reserve asset and wanting to accept Bitcoin is a huge wake-up call. And it was the first major, I mean, there's been other dominoes, but this is going to be one of those moments where it's before Elon and after Elon. It's like this was the moment that was very pivotal in the adoption process of cryptocurrencies, because Elon is so influential and powerful that he can move markets by just a simple tweet.
Yeah.
Like, it's nuts. And so now it's like nobody wants to be first, but nobody wants to be last. And so it's just going to be boom, 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 boom. That's why since the Tesla stuff, we have seen so many freaking news articles and so many companies deciding to jump on the bandwagon. So you eventually get to a point of no return.
What would you say to someone who thinks it's too late to get in? Someone's like, it's at almost 50,000 a Bitcoin. I'm kind of too late. I'm not going to waste my money. It's kind of an asset that I mean, obviously that's probably something you think is just foolish, but
that's have fun being poor. Why wouldn't you expose yourself at least a little bit to the best performing asset of the last decade? Like, I mean, at this point, it's irresponsible to not have a position in Bitcoin. You have to at least get off of zero. Sorry, I didn't mean to be too harsh there.
No, you're good. It's just funny. I mean, okay. Like I said, you put it pretty blunt and frank. You're just like, why would you not?
Yeah.
if you looking back in hindsight, you probably would have got in at 5 or 10K, but now get in at 50 instead of 100.
Right.
Speaking of, when do you think Bitcoin will hit 100K? I know you're big on predictions,
Yeah.
they're more so fun than they are financial
Mhm.
advice. But
Yeah. So I see probably 100K by June.
June.
Yeah, probably by June. 100K by June.
I think, in my opinion, predictions are bold. Predictions are fun, especially with I relate them to sports because
Yeah.
I'm a big UFC guy, and these guys are always like, "Oh, I'm going to knock him out in the first round."
Yeah.
If they knock him out in the first round, they look like they look like pharaohs. They called it. If they don't, they're like, "Well, it's a fight. It's pretty even. Like I was wrong." I think
Yeah.
it is. You look better if you make a bold prediction because people forget it pretty quickly. But if you make it right, they're like, "Whoa,
Yeah.
he called it." So.
Yeah, and I'm predicting 200K by September, October.
And that's steady.
Yep.
That's insane. I hope you're right.
Yeah, I will.
Yeah, I did have. I told you prior. I did have a little bit of crypto, not a lot, but I did have some money in Robinhood, and I didn't leave because of the whole GameStop thing. Like I'm not going to act like I was some pissed off boomer. No offense, but
Yeah.
I made some money on DraftKings when they opened their IPO like a year ago, and I was like, well, I think no better time than to take all the profits and flip it over to crypto. So I put it all in there.
Right.
So I've been getting on the ball quite
That's
a bit
cool.
more. Yeah.
That's awesome.
A couple other questions I had. I think I know the answers, but they're not for me. So, do you absolutely need an e-wallet to store crypto, or can you just do it on on the app on Coinbase or other platforms? I know you're probably going to say you would recommend an e-wallet, but
Yeah, I mean, anybody can keep their money with an exchange. I mean, they're basically using it like a bank, but it's not smart. I mean, because every time you hear of somebody getting hacked, it was typically an exchange getting hacked because Bitcoin's blockchain hasn't been hacked. It's the exchanges that get hacked, and they're just honeypots. I mean, they're a third party with centralized servers, and they're managing this private information, and they're prone to that kind of stuff. Despite how serious they take security. So I would recommend if you don't want to buy a hardware wallet, which is like a device that looks very similar to a USB device.
the Ledger.
Like the Ledger, yeah, that's the one I use, and I know that's the one you use.
Mm-hmm.
And if you don't want to use that, if you want to, pay $100 to get one, it depends on how much money you got in crypto. Like I use a hardware wallet. I use a desktop wallet. I use a mobile wallet, but I don't store. Most of my wealth is not stored on these mobile or desktop wallets because they are considered hot wallets, which they're exposed to internet exposure at all times. So
for the long haul, you're putting it on your Ledger.
Yeah, for substantial amounts of value, I'm putting it on my Ledger. But I would say that being able to have a wallet that allows you to have full access to the private keys and gives you a seed phrase to back up that wallet, at that point, you become a sovereign individual over your wealth versus having to trust a third party, to manage your money for you. And so I just think, if you're going to get in the space and you like personal responsibility and you like freedom, then it's probably a good idea to, not find yourself in a Robinhood situation saying, wait a minute, I can't take my cryptocurrency off your exchange. Why? Because you're having technical issues. Oh, wait a minute. You got hacked. Oh, wait a minute. Was it insured? Am I going to get paid? Are you going to give me the value in dollar terms what it was 6 months ago? How long is it going to take for me to get my money? Do you want to be in that situation? Sure, there's risk involved in being your own custodian and managing your own money. You could lose that private information and poof, your money's gone. But you just gotta weigh. You gotta weigh the risk and the pros and the cons. What is your, what's your risk tolerance?
So I know when you buy on Coinbase, and that's where I've bought most of mine anyway, and then put it on my Ledger. The fee transaction rate is kind of high right now because it's kind of a hot market. Do you think that will kind of go down anytime soon, or do you think that's going to stay pretty high just because of the nature of the market we're in?
So depending on,
I want to say high, like 5 to 6%, but I mean that's a lot higher than we're used to paying. So
right, yeah. So I mean, again, it discourages, trading and moving money around in that extent. You're going to have multiple layer solutions that evolve. One thing that, like when it comes to transaction fees, as the market grows, things get more competitive, and networks get stronger. So whether it's the miner fees or whether it's Coinbase's fees, this is just the evolution of a marketplace and an asset class all being developed by the free market. And really, if we had true price discovery in a lot of things in the world, which I truly don't believe we have, I think we have a form of, corporate cronyism. I think I call it a crony capitalism. It's not true capitalism. People are always like, "Oh, those dang capitalists." So it's like, this isn't really capitalism. This is more like an oligarchy with crony capitalism involved, or corpocracy. But my point is, I don't mean to go on a tangent there, but my point is that, I think with more people entering the space, more companies offering products and solutions, more people jumping on the blockchain networks, and then developers developing solutions and solving problems, creating these multiple layers. It's going to get better. It's going to get easier. It's going to get faster. It's going to get cheaper. It's already cheaper to send $1 million from America to country XYZ in a matter of a few minutes and pay, a couple bucks to send a couple $1 million. Like, how much would you pay through the traditional financial system?
right.
Like, it's probably substantially more.
I saw yesterday you were kind of ramping up, reaching out to some Oklahoma senators and representatives to kind of get on this wagon for Oklahoma. Tell us a little bit more about your plans with that and kind of your, I don't know, your bottlenecks with that. Oklahoma kind of being a step behind per se, typically in that field. Is that something you're really pushing to do, or are you just kind of, trying to put a bug in their head, or are you really trying to be an advocate for that?
Well, I would love to see the state. I mean, I've worked with the state government before to try to educate them on some of this stuff and to, propose legislation, help write some of it. And, not a lot of it has gotten a lot of, to where I want it to go. But I just want to make it known to them, like, hey, we should probably as a state consider doing this, because I don't know what this financial transition is going to look like. I don't know what the federal government is going to propose when it comes to resetting the system. And how long are they going to let inflation ride? How long are they going to continue to, do what they're doing? Because eventually the velocity of money will catch up, and we'll have, extremely higher prices. So if you've got any type of fund, whether it be a rainy day fund, or some other fund that the state holds for a long period of time, we even talk about state pensions. It's like, what are you going to do to safeguard the purchasing power for these programs and these funds that you have within the state? I mean, state governments can't make their own money, and so it's like whatever the federal government does to our money at the moment, or currency, I should say, we're subject to that. So it's like, if inflation really does kick in, like, our several $billion rainy day fund could have the purchasing power of half of it, you know what I mean, instead of what it has today. So it's like, can we go ahead and allocate some resources to stores of value that can hedge against the inflationary dollar system, like precious metals and Bitcoin? How cool would it be for the state government to just, now I'm not even saying collect tax revenues in Bitcoin, just buy Bitcoin, like hold it as a reserve asset, like
Just be one of the early guys.
Yeah. So, and I think the state would benefit by it. And I think it would be beneficial to keep the state going, because, one of the things I like to point out too, and I'm not a lawyer, I'm not a constitutional lawyer or anything like that, but it's pretty black and white. When you read the Constitution, I believe it's Article 1, Section 10, talks about how no state shall coin money or make anything but gold and silver legal tender in payment of debts. So our money
we don't have, right?
But yeah, because our dollar used to be backed by gold and silver, right? So if our money used to be backed by gold and silver, I could see how a state would collect taxes, because I believe that if you owe the state a tax, it's a debt. It's something that's been levied on you, forced upon you. You owe this, so it's a tax debt. So if the state's going to collect these debts, they've got to do it in gold and silver. So if our money's no longer backed by gold and silver like it used to be, then all the taxes that we've been collecting from 1971 kind of seem unconstitutional to me. So, so like if we're going to follow the Constitution, let's have a conversation. Let's at least talk about it. A lot of people don't even go down that rabbit hole, but so I just want what's best for the people of Oklahoma, and so I'm just saying, hey, like let's do something.
I think there is a large number of people, I could be wrong, but still a large number of people that really don't even understand our current monetary system. So the fact, talking about Bitcoin's a whole nother beast. Like I think we said last time, a lot of people, including myself, I'd never heard the term fiat money till I was like 21 years old or something. So,
right.
And then I was like, what do you mean it's fiat money? Like it's not real, or it could, diminish per se any day now because there's no, concrete value to it. So
right.
I think when you open up that can of worms, some people are just, kind of mind blown, and then they don't even, it's kind of easier just to close the curtain and be like, I'm just going to spend my money and do my thing because this seems weird and takes a lot of research and time. And
yeah, but I mean, to me, like going back, like my book, Foundations for Liberty, the one reason why I wrote the second half of the book about monetary sovereignty was like, if people can make that connection, that money equals freedom. And I'm not just talking about being able to buy things. Like money is just a tool. It's a vehicle that represents your time, energy, freedom, labor. So it's like, if you're going to use that tool to represent those things, your time, which honestly, your time on earth is the most scarcest thing that you have. Like, and so if you're going to use a tool that represents that, you're going to trade your time for this piece of paper, which is losing value every day because they're creating more of it. Like, they're essentially stealing from you. They're stealing life from you. They're stealing freedom from you. And so it's important for people to understand that. And that's why I'm like, you guys, I know it's a boring topic, but like you could get super passionate about it once you realize that you can actually take the shackles and the chains that have been holding you down with this corrupt, messed up system, like liberate yourself, become sovereign over your own time and money. Like you can do it. Like Bitcoin, cryptocurrencies, precious metals, these things are stores of value. They are a life raft. They are an exit out of this corrupt system.
I feel like in 20 years, there's no one between. You either going to look like the crazy guy or you're going to be the freaking superhero. You'd be like, hey, Matt was crazy back in 2017, or be like, oh my God, Matt was freaking walking around preaching to everybody. And, tried to tell us, I love the status to say, hey, I warned you guys in 2017. I'm warning you now.
I know. Well, it's true. Like all the stuff that's happening today, I was talking about it in 2017. I'm not trying to do like confirmation bias here, but like it's in the news. Like, I'm like, guys, like let's at least have a conversation. Half the crap I say might be crazy, but what if half of it's true? Like,
right.
You know what I mean? Like that half that may be true might actually just save your life.
Sure. Yeah. Pay you huge dividends.
Right.
Yeah. When I linked up with you in 2017, like I said, I bought some and I kind of just put it on the back burner, not because I didn't believe in it, just because, it wasn't in front of my face and I didn't do the research. And then now, 2020, and I started to kind of delve into it more and then reading your stuff. And that's why I was like, well, I'm going to get back on the board and kind of get in a little more. I'm a little later than I should have been, but I'm joining late better than never. So,
right.
One other question I did have for you that I knew was specific, and then we can, kind of wrap it up. I know you're not into stocks in Robinhood, but when you buy crypto on Robinhood, you're not actually buying crypto. You're investing in it, correct? Like that's confusing to me.
Yeah. So with Robinhood, you're getting exposure to the price action. You're not actually owning the asset, because Robinhood won't actually let you pull the cryptocurrency off of their platform and into your own wallet.
Right.
So yeah, anybody that tells me that they're investing in cryptocurrency on Robinhood, I'm like, do you want to own the asset or do you just want price action? Like, because you know, like
Can you dumb that down when you say price action? Like I included myself because the only reason I knew I didn't own crypto on there is because like when you go to buy it, like say if you buy $100 on Robinhood, it's like that. And then for some people who may not have bought actual crypto, on your Ledger wallet, it's like breaking into a vault.
Right.
And it's a huge process. And I knew the fees when on Robinhood, I hit a button and it was like, boom, $100 easy.
Right.
So that's why I knew it wasn't the same thing. But I don't know if a lot of people know that it's not the same thing.
Right.
So I was hoping you could elaborate on that and in very dumbed down terms.
Sure. Yeah. So essentially what Robinhood is making the agreement to do is that when you give them your money, they're buying the asset for you. Supposedly buying the asset for you.
Right?
Maybe buying it for you, and then they're going to credit your account based off of the price action of the asset, which is the ups and downs in dollar terms of that asset that they're holding on your behalf. And so when you want to cash out, you'll execute a sale or you'll sell your position, and then they will give you dollars for the profits or what you made off of that trade, but you actually never held the asset. Like they were holding it for you. Right. And even if you wanted to go to Robinhood and say, hey, I want to hold the digital asset myself in my own wallet where I have control over it, like they wouldn't have a way to do that because that's not what they offer. So
I don't think a lot of people know that.
They don't.
Like I said, I wouldn't have known that if I hadn't bought my own crypto on the wallet and went through the process because, it could be kind of daunting and very secure. And
right.
It felt like a much bigger deal than buying on Robinhood. So,
right.
But a lot of my friends and people are buying on Robinhood, and I don't think they know it's the same thing. So could be wrong.
Right. Right. Yeah. And, it's like, and the thing with Robinhood is like and not saying that this would happen because I think we're too well entrenched in this, but let's say that there was some kind of regulation or some law put into place that was against crypto, right? Okay. All right. Well, guys, we're going to have to, liquidate everything that you have and give you dollars for it, and it's like, you wouldn't have the opportunity to be able to still hold that asset and sell it somewhere else.
It's just a forced sell.
Yeah. So, it's like, not saying that would happen because we're way too past that, but Bitcoin is not going to be banned. Mark my words, it will not be banned. But so I just would caution people, like, do your homework, and it's weird for people to wrap their minds around, because when I say be sovereign over your own money and hold the asset yourself, well, it's digital, Matt. What do you mean hold it yourself? Well, okay, with each cryptocurrency, there are public keys and private keys. The public key is what you use to receive money. The private key is what allows you to take control to send money, right? It gives you the driver's wheel to that information, to that digital information. There's encryption involved. So the private key is essentially your flag in the ledger, the distributed ledger system. And it gives you permission on the blockchain to be able to move the quote unquote funds, or we'll just say digits for ease sake. It allows you to move those funds. So it's like Robinhood holds that private key. They hold that sensitive information. If they're truly holding that asset or that space on the blockchain for you. But you as an individual, I would encourage you to actually hold the private key or the seed phrase, depending on what kind of wallet you use. Hold it yourself, because that is what gives you control to be able to say, you know what, I'm going to send my money over here. I'm going to send it over there. I'm going to do what I want with it.
Do you think that banks will eventually play a big role in that, being kind of the middleman, or do you think that is the point of this, is cutting out the middleman completely, and you think it's going to be crypto and the people, and there's no middleman of it? Or do you think the banks are going to make their way in and try to kind of re-identify themselves and be that middleman for crypto?
I think it's going to be both, because I think the original design for crypto was to cut out the middleman. Mm-hmm. The original design was for you to have full control over everything and for you to basically be your own bank. Like the motto is Bitcoin, be your own bank. It's a Swiss bank account in your pocket is essentially what it is. And so I think people who don't want to take responsibility or don't want to take the time to understand it or how to use it and just be lazy, they're going to use a bank. They're going to use an exchange. They're going to use a third party to manage those funds for them. They don't care. But for people who do care, I think there's going to be a larger portion of people that will eventually get to that point of caring, and the technology allows for it. So as long as there's a way to do it, I think that way is going to continue to grow.
Yeah, if it's out there, consumers will find it, but then some people will kind of put the sword in their own pocket. So good stuff, man. Really good stuff. I think I am good for now. I don't want to take too much of your time. I know you're enjoying that warm weather. Not like the
I love it.
cold.
It's great.
So, as always, I drop the links for people to find you, but tell people where they can find you, and promote yourself, and then we'll get off here.
Yeah, you guys, if you want to read more about me or interested in my book, mattjmoore.com, or cryptomore.com, and that's more with 2 O's. Foundations for Liberty, you can find it on Amazon, and both Kindle and paperback. But I do this stuff often, and I've got a Patreon, which you can find on my website. So if you want to be updated with this information on a regular basis, I've got a monthly subscription where when I consume the information and I digest it, I'm going to be giving it to you. So it's fun. So if you guys, you can find me there.
Yeah. Hey, how many hours a week are you putting into this stuff, man? Cause I know it's a lot. This is like I feel like this is like your master's degree in finance or something. So
it has been a hobby of mine since the crypto space for the last 4 years. But I really started studying the money system or monetary system back in 2009. And so I would love to be. I mean, this isn't my full-time job. I would love for it to be, but I haven't gotten there yet. Just as far as it's growing. I'm getting a lot more clients doing this stuff, but it's one of those things where I think as it evolves, it'll be more needed. For people to do some hold handing, because essentially that's what I'm doing is I'm holding people's hand saying, okay, hey, let's go over here. Let's do this, and trying to be something that, can be, I'm basically the training wheels. I'm trying to be the training wheels for people is essentially what I'm trying to do.
Yep.
I love doing this. So yeah, I don't know if I answered that question, but I think I went on a tangent there.
No, you're good. Now that I can't even think of what I originally asked you. Right. I don't know. I do want to say though that, I agree. I trust you. And, I've followed your stuff off and on since 2017. And, I think everything you've put out has been consistent, and, it's never been like a cheap sales tactic. Like, I think before almost every question you answered before, you say, hey, this is not, sound financial advice. This is what I'm doing, and I think it's going to work, but don't take that. And long story short, for the people listening, I think that's something you've been consistent at for the last 4 to 5 years, when you started your consulting deal. And it's no matter how many people you've had follow you or whatnot, it's always been pretty much the same information. So I think that's rare to see for people over that period of time to be so consistent. And so, you're not selling some cheap product or so. Yeah.
I just want to help people. So like, that's why I say that stuff. Like it, for me, liberty, sovereignty, like I just want people to, learn and be empowered.
The question was, how many hours are you putting into this thing a week? Cause you're doing it for your own self, but then you're consulting and putting out a lot of free content too. So,
oh yeah, I do. Yeah.
So yeah, how many hours a week you into this thing?
So I would say on a minimum 4 hours a day.
Okay. I believe that for sure.
Yeah. So yeah.
Well, good stuff, brother. I really appreciate it. And I'm sure we'll have you back on the road again, and definitely we'll have you back on in the summer to see about those big predictions. So that way we can laugh about it, or we can be like, dang dude, we made some serious cash.
Wrong. You can poke me in the eye if I'm wrong.
Yeah, that's cool, man. Hey, like I said, I think making bold predictions is fun. So no harm, no foul. But if you're right, you hit the jackpot. So, but hey, dude, thanks once again for coming on. I appreciate it, and we'll talk to you soon.
Sounds good. Appreciate it.